Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading. Take a look at hot spots in the markets for the day. Today is Friday, March 18th. I'm Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Brian Caprice. There's not a lot to really talk about this morning, as everything seems to be a bit on pause as markets do a little bit of consolidation. We do have oil backing off a little bit after its run up yesterday. We've got equity markets looking to open slightly in the red after a fairly significant run up all week. And now everything is just sort of starting to hit pause. We got gold consolidating, just trending sideways. So we are going to look at a few of these markets, though, check out some technical levels, because as with consolidation, you end up being a little bit range bound in certain things. And we'll take a look at where we're seeing support and resistance through this day of consolidation, or at least that's what we're seeing now. Don't know what the rest of the day holds. I always root for a feel-good Friday. I love it when the market's up on Friday and I go into the weekend. Puts me in a good mood, particularly as we've got March Madness going on. And I did stay up late to watch UCLA squeak out a win, and I even watched Kentucky get clipped by St. Peter's of Jersey City, New Jersey. Love it. A 15 seed taking down a 2 seed. So
Yeah, that I'm sure messed up a lot of brackets.
I think that busted almost everyone's bracket, unless you went to St. Peter's, a school of 2,000. I think they got 2,200 undergraduates.
Even then, I'm pretty sure that busted their brackets too. Even if you went there.
Even if you went there, you might have still taken Kentucky. All right, that's funny. All right, before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. And here's just, you can see how crude oil, I mean, there's the chart of crude oil yesterday, rallying. We were calling for that rally. Early this morning, it just started to roll over a little bit. We'll take a look at levels. And then the one other thing I know Brian's going to talk about is Bullard calling for that 3%. If we're at 0.5% and we're going to do 6 more raises, to get to 3% Fed funds, we're going to have some 50-point basis rate hikes. 25 isn't going to get us there, is it? So
not if you know simple math.
I was about to grab out my calculator. I don't think I need it for that one.
Yeah, not if we're going to do simple math.
No. All right, so let's see what else we got going on over here.
Yeah, I mean, the only news we had this morning was the news out of Canada. Everybody expected the day to be great. It actually came in much higher than expected. So again, I think watching headlines, and again, dollar CAD, although it's retracing a bit now because, again, great news, it's pulling back as people are trying to react to the news when the market had already factored it in. We should be looking for kind of rate hike statements and comments coming out of Canada. So that should be coming rather soon, and it should help. And again, obviously mainly dollar CAD, but again, other off-currency pairs that we can't trade at Nadex, CAD Yen is also going to be a big one to start trading when they start mentioning that. Besides that, in the overnight, the only thing we're really seeing is the pound moving a bit. The pound dollar's up 40, euro pound is down 40, which again is pound strength, European weakness, and then pound yen is up 83. We talked about their rate raise yesterday. There was a big drop down. They're in rate hike number 3 and still showing that they're going to have 8% inflation in the second quarter. Mentioned that, listen, this was kind of, that big drop was kind of a market disappointment / people trying to react after the fact versus beforehand, and it would retrace. And again, I'll show you that in a chart. We've retraced back. And that's it, really. We've seen, the dollar is kind of leveling out. You're seeing some dollar weakness, right? A little bit of dollar strength in there, but not anything that's really kind of earth-shattering for a Friday. And really going in and looking at even the news headlines, I mean, it's nothing but gray and yellows in here. So, some of the big ones that I think are important to look at. This is one. There's an interesting article here that talks about the Fed is not hawkish enough, talking about the different rate hikes. And, Todd and I were joking about it. Bullard actually, he actually explains his recent ascent and why. and read this, I don't. It's very, very difficult to not be like, yeah, what? I don't understand why does nobody listen to him? I honestly believe that he'll be the next guy to take over. I don't think Bernard at this point. She's made absolutely no comments, has shown no leadership thus far that we've heard, seen. She may be the next Yellen, where it's kind of like, who's that? What's her
Yeah.
name? Where he is constantly putting himself out there, making these statements, and like Todd said, you can say we're gonna do 7 times this year, okay? And Yellen said, be prepared, inflation's gonna grow for the next year. Even though we're doing 7 times this year, be prepared to pay higher prices over the next year. Versus, and again, they're gonna have to fit a 50 in somewhere. But if you do a 25 and then a 25 and then you do a 50, doesn't that kind of mean that you didn't do it right the first 2 times? And can the Fed at this point kind of handle one of those, like, listen, we failed you again? Biden's lowest approval rating is in the economy and the way that they've handled inflation, and limping into it like this with 50-50 and maybe having to do a 25-25 and having to go to a 50 shows that they did it wrong. And they're saying that, uh, you know the labor market and it's transitory inflation, it's going to disappear. Well, it obviously did not disappear at all. We talked about that and we were on that soapbox for a while. So it's a very interesting kind of battle back and forth again.
And we saw what happened. I mean, yeah, I know you're going to do this, but we saw what happened to the pound when they were weak on theirs.
And look at this. Waller just popped in. Data is screaming at us to go 50 basis point increase.
Hey!
But geopolitical events call for caution. Again, this is what's gonna, so again, they're saying that the data, and this is good. This goes back to the same thing. Remember all the jokes like you need to trust the science. Yeah. Well, the data
is the science.
Data doesn't lie, right? The data is the science, but yet nobody actually. It's like no, I really favor front loading or hikes, but yet, only one person dissented yesterday. So this is why it shows you. There was a CNBC talked about it earlier this week, and there was a guy that was, I don't know if he's representing the Fed or was on the Fed or is friends with the Fed, has coffee, donuts, whatever with them. Talking about how the Fed is not compromised. They're not a political organization. They're completely separate. And it goes back to the proof is in the pudding, right? Again, first it was transitory inflation, and then it was a tight labor market. It's like they will find every excuse in the world to not just do something.
Do what needs to be done, and we see it. We know it.
Yeah, and that's the thing. If the data and look at this, data is screaming at us. Okay, so do something about it. Again, it shows that politics has really kind of swayed what, the Fed being a third party kind of independent board, it has really swayed it. And again, I think this is why there's major changes coming down the road, particularly because limping at this 25 is going to jack inflation for the rest of the year. And we've broken new records. We're 40-year highs. And we already know that they've already told us it's going to continue to get worse for the rest of this year. What the heck is the midterm election going to look like? And if people vote with their wallets, holy crap!
Yeah, we're gonna have some. It's gonna make for some interesting times. So
yeah, it's gonna be nuts. But really, that's about it. I mean, looking at charts, here's the pound yen. I said I'd mention this one. Here was the big swing down, and again, they raised interest rates, and there was a massive amount of weakness. I said, hey, listen, this is a textbook parabolic retracement move. The data came out. It should have brought more strength to it, and what happened is it dropped down because everybody saw, oh, they're gonna raise, buy, and then they lost all the money on the trade. And what it did, it retraced the rest of the week back up because it is technically a longer term kind of strength for the pound, and it is retraced back up to the 156. Now, are we at a sell area right now? It's an area where, again, there was strong moving off of it. It was news based. People argue, on a technical basis, you should be selling right here. I mean, it's already hit it once. It's bounced it again. We're going into a weekend. There's probably not going to be a lot more of action in. It's going to be kind of dominated by the yen later on today. Is it a level that we could potentially take shorts on Sunday? Maybe. But overall, I mean, right now the pound has the highest interest rate that you can get from anybody. Pair that with the yen in this currency pair. Large banks and institutions are going to say, hey, listen, I can catch a 0.75%. That kind of looks pretty nice. So they're going to start going over there. Because again, remember, the way to get guaranteed money is in bonds. But right now, with interest rates all rising, it has an inverse relationship with bonds. Those are going down. So they're looking for places to put money to get a return. And when I say money, I mean like cash, not invested in something, because currencies is so liquid. It's such a huge market. It can go in and out with the touch of a button. It's very, very fast. So I would say look for some potential pullbacks. But again, for the most part, even like the pound dollar, you're seeing it's consolidating. It tried to get all the way back up again. And then again, the dollar, some dollar strength rolling back into it, and that's what rolled us back forward. But as far as the indices go today, I mean, the VIX is up a little bit. If you're wondering why, where is it? China just sailed an aircraft carrier, right? They just went through Taiwan and said, hey, yeah, we own, it's ours, right? We own it. And it is a little bit different of a situation, right? The Ukraine was sovereign. Guess what? Taiwan is not considered sovereign. Nobody acknowledges them. It is not internationally one of those things that, yep, they're their own country. We support them. Like, we support them, but they're not internationally recognized. So there is a difference if China decided to go and just blast it. It's not internationally recognized. It's a little bit different of a scenario. So kind of a weird thing. They've already said we're going to take it. We are going to go step back in again. So aircraft carrier there is not great, but again, that's why you're seeing the VIX pop a little bit today. If obviously nothing more is going to come about it, they're talking on the phone later today. We should see this continue to push down a little bit. Right now, all the indices are down a bit. Again, from where we were yesterday, we had a pop. You can see just consolidating, right? We had a high here at 4 o'clock yesterday and kind of pushing down. And now we kind of have like a little bit of a stabilization here. And could we have a break? Sure. We had that alert at 43.64 if it breaks through, kind of looking for it to come back down. But right now it's just really consolidating. And again, if the VIX continues to decline, this should find some buyers in this area and we should kind of pop up a little bit, lack of any real news. NQ, you can see we had a level yesterday. And again, these are opening morning trades. I'm going to leave those on for my group. But you can see that this was an area where we had sellers. And what is it doing? It's, it was a top. It was a top. Well, top. Bounce through, based on the top, based again, based again, based again. I mean, here's the European session, right? Does technology not exist in Europe? Because it is doing absolutely nothing. And again, the 3 o'clock win. I mean, really, since late last night at 10 o'clock, the price hasn't moved. So it is currently down the most at 0.77%, 0.76%. But is there really a trend right now? Not really.
No.
Not really much in there. There's no real driving factors. And YM, same thing. You can see kind of the same thing. Look, we got our 3 up top. You can say, hey, wait a second. Yeah, there's a base there. And it's kind of the same thing. These are trades from yesterday. I'll leave those for my group. But you can see that, yeah, there's basic in there. If we break through that, yeah, there may be some short opportunity. But the realization is, what's the catalyst? I mean, I guess pending home sales. Pending home sales maybe, but that's not really a huge market mover. So, interest rates have risen, but it's a lot less than expected. There's articles that's not hawkish enough. And, you can say, hey, we're going to raise it, 87 times in the next 2 years. But
well, that would
right now,
that would just be impetus for the market to continue to go higher.
Yeah, it's continuing to go higher. And same thing. Look, no trend in the Russell either. And the Russell is typically the first telltale sign. And again, kind of using that same level, but we do have some basing sitting there. And do we run all the way back down? I mean, question is, can we get all the way back down again? And the answer is maybe today. Can we get back down to 2013? Is there a catalyst for it? Maybe, maybe not. I mean, I don't know. I guess in their phone call today, when they have their phone call later on today, if there's talk, if they're like, hey, listen, we believe that, our new thing now is we try to say what the opponent is doing, right? If we say that, hey, it looks like China is aggressively starting to move on Taiwan, that could obviously send the markets down. And again, could that happen? Sure, it could. Here, Waller, we can remove liquidity from the system without doing too much damage. It's so funny. One guy dissented, and today Waller was like, hey, I got the microphone. Look at this, guys.
And now he's spitting the truth.
Screaming at us. Yeah, it's screaming at us to do something. Look at this. We have room. We can do this sooner rather than later. We can be faster on the balance sheet. Where the heck were you yesterday? So pretty funny. But that's the indices. Oil's in the red. Yesterday we talked about a target at 101. I mentioned to my guys, at least, I wasn't really willing to look forward to. I wasn't looking to sell it. And again, it ended up coming through. Gave us a little bit of a Harry Potter, right? It came through. It based and then came back and pulled to that same zone that we're looking at and went higher all the way up to 106. I don't think this story is done. Putin is very. He knows that he doesn't need the missiles to fly. He just needs to shut the oil off, and he knows that he's got a weapon in oil. He knows it. So I think at any moment with any bad headlines, he decides to say, hey, you're going to mess with. Okay, great. I think oil has the ability to spike even further. Natural gas is obviously pulling back a little bit as well. It's been rallying, though. It's nice to say, hey, listen, it's down 1.2%. But the reality is, here's the European session right there. So thus far this morning, it is definitely on more of a bullish run. And it is running into sellers for natural gas. So, it's definitely something, watch out for it. Gold taking a little bit of a pause, but at the same time, same thing. Look, low, right? But at the same time, you can say, well, it's kind of down here. Yeah, it kind of is. But, since this morning, since the Europeans came in, it's been kind of rolled around. And here's the European open. So gold is also in kind of a consolidation mode. It's like, well, I don't know.
It's range bound. In fact, if I'm actually going to put let's see, put it. You can actually just Oh, well, I was trying to draw it on my chart and I
Yeah, you
screwed up
could. I
my
mean,
button.
yeah, I mean, I would say, I mean, here's an area right here, particularly for gold. It's a level of basing. We had that strong push from FOMC, a level of basing. We've kind of flirted with it before and kind of pushed back down into it. You know, if you're really looking for something, and maybe not this week, maybe it's a next week type thing, right? You know, again, with it being Friday, some of your analysis today should absolutely be like, how am I going to start next week? Or you shouldn't go into next week totally like, let's see what happened. You should have a little bit of an idea, and this is a potential short for next week. Um, One thing you know, and a way to look at it is maybe look at a kind of a week long position next week in gold. There are ways to play it. This could be one of them. You know, it's an area basing. You know, what's the hold it back? We're rising. You know, we have raising interest rates right now. We're trying to get rid of inflation. We know how horrible it is. That is a gold negative, you know, gold bearish type position. Stance on it. And then again, Waller's over here mouthing off like, you know, listen, this is the, you know, he's just going right.
Yeah.
We're getting neutral by the end of the year. As long as we communicate clearly, the market adjusts. There hasn't been much market turmoil. Yeah, exactly. I believe inflation will pull back next year. Next year, so we have an entire year of building inflation.
And
We
that
expect
would
supply and
be an
data.
impetus for gold for gold to push higher unless the Fed
Yeah,
actually does something.
yeah. And what's funny about this is when you look at these comments, they're saying that the big contagion is coming from the war. They're not talking about China being locked down. 51 million people locked down because like, oh, it's Omicron. Pfft, nobody cares,
Yeah.
right? But 6 months ago, if they were saying we're locking down 51 million people, it's like, oh
It,
my god, what kind of supply chain issues is that going to cause? Because that was the problem. Anything produced in China, we couldn't get it out. We couldn't ship it. I know for me, I couldn't get anything for the for the boys teams or anything. We couldn't order. There were supply chains for everything, right? Now it's like 51 million people are locking down. It's Omicron.
I
Nobody
think,
cares.
yeah, the
So
pandemic is turning into an endemic, and it was
yeah,
strange. If you watched any of the basketball yesterday, I thought it was odd. Is uh, I don't masks were not required, so no one was wearing any masks that I saw in the arenas except for the cheerleaders. They were the only ones to wear masks, which I thought,
yeah.
uh,
Yeah,
uh,
I mean they are saying that there are spikes going on right now. You know, it's the I forget what some of the data I saw yesterday, but yeah, it is spiking again. But it's the same thing. As long as we're spiking with Omicron, it tends to be out of the system very, very fast, and people are just over it. You know,
yeah,
it's
and
not
it's
the
well,
way
it's
that's
not
killing a
putting,
lot of people. So
you know, if people have been vaccinated, it's not putting them in the hospital,
yeah,
right?
it's
We're
putting
not,
very few people in the hospital. It's one of those things. It
yeah,
doesn't. I mean, it's funny. We used to hinge everything in the stock market used to hinge on. Oh my God, Pfizer's putting in for another thing. Moderna yesterday put in for a fourth dose in a broader range for all adults than even Pfizer did. We're not even hearing it. It doesn't even show up on the headlines anymore.
yeah,
So it's interesting how 6 months can make a huge difference. Where it's like, oh my God, they're putting in for an approval.
yeah.
Um, and even
So
right now, what's crazy about this is they're saying if you never got any boosters at all, you basically have no protection. It's dwindled that far back again. And they say they're not people are not getting the thirds, people are not looking for fourths. It's crazy how 6 months changes everything. So we'll see. I mean, like I said, lack of any real major news today. I love this. The data is screaming at us to do 50.
okay.
Okay,
Oh, and then
but that's
yeah,
about it.
I got Ernest screaming, "I hear you."
I said that just for Ernest because I knew he's listening this morning. So I said that just for him. So I get, you have to give, your supporters, those crackers and some
I love it.
the
I love it.
crumbs.
I love it.
So
All right. Well, with that, any questions for Nadex, please email us customer service at nadex.com. Although, Ernest, you don't have to send that one. I got you.
we
Brian
joke, and
is
that one
accessible.
goes right into your spam folder. I
And
told
if
him
you
to
had
email you weekly till you got it.
I like it. Uh,
That's
Brian is
probably the
also
real reason.
accessible.
That's probably the real reason why IG sold nadexthecrypto.com is
Yeah,
because
it's because they
Ernest
wouldn't
was
do
emailing weekly about weekly call spreads,
a
commodities. Just saying. Just saying.
maybe. Oh, we will have some exciting new things coming along shortly too. So things are moving quickly with the acquisition finally closing, and so stay tuned. Any questions for Brian? You can catch Brian at support@keeptradingsimple.com. Please feel free to email him. I'm also available, todd.rich@nadex.com. And that's really not a lot to talk about this morning. Just consolidation across the markets, and we're going to wait and see how retail traders want to position things going into the weekend. And Brian and I will be back again on Monday. Until then, Hope everyone enjoys March Madness, and good luck in the markets. We'll talk to you Monday. Thanks everyone for joining.